it's endless in terms of how the capital markets, how the financial system changes once everything is on chain. The capital markets are going to be forever changed. It really is, like in a way that people are not quite thinking about yet. Eventually, we're going to sort of converge on the best method possible for this. I think those people, those groups will be rewarded to be able to say, yeah, our tokens really represent the shares now. They are the shares. If we live in a world where all those shares are tokenized and we have stable coins, right? What's stopping us from the order book itself being fractional?
Nothing said on inflection point is a recommendation to buy or sell securities, tokens, or any other assets, nor does it constitute a solicitation or offer to invest in any fund, product, or financial instrument. This podcast is for informational purposes only. The views and opinions expressed by hosts and guests are their own and do not necessarily reflect the official positions or views of their respective employers or affiliates. Hosts and guests may hold positions in companies, funds, tokens, or projects discussed. Hey everyone, welcome back to Inflection Point. I am joined by the first time with Gabriel Otte, co-founder and CEO of Dinari. Gabriel, how are you doing?
Doing well. Thanks for having me, Mark.
Yeah, thanks for joining. Quickly before we kick off, for listeners who may not know, can you tell us a little bit about yourself and Dinari and what you guys are up to?
Yeah, so we founded Dinari, my co-founders and I founded Dinari in 2021 now. So it's going on our fifth year. And the idea was to create a compliant framework for tokenization because we really believe that the world was going to tokenize, which we're finally seeing after working on this for so many years. And in that world of where everything is going to get tokenized, we needed places where these tokens that represent the various assets can trade in a compliant fashion in a way that really rewards investors so that we can start creating platforms that are truly these omni-asset platforms, right? Omni-asset trading platforms. We think that's where the world is headed. That's where wealth management is headed to sort of break down these sort of traditional barriers across the different asset classes and geographies. So we're finally starting to see bits and pieces of that come to fruition. So we're really excited by that. I myself, I was in biotech before the company was relatively successful. And my co-founder, Chaz, he also took a company called LegalZoom public, and then Brandon Uwe, who founded a company called Crunchyroll, which he sold to Sony. So all of us had some background and experiences with wealth management and how terrible wealth management can be at times. And we just believed that the world was headed in a direction where everyone could benefit from a more transparent financial system, but also things like capital markets really coming on chain so that it can be available for people of all geographies and asset classes.
Okay, nice. Wow, 2021. That's a very long time in crypto years. I will say you still look rejuvenated and up to it, despite all of that hardship of living through multiple cycles and Operation Choke Point. That's really fascinating. That seems like a pretty stacked co-founder lineup there. And so you've given me some of the background. What's like the quick 30-second elevator pitch for somebody who doesn't know about tokenization? What would you say? What would you say to that when you're trying to sell it?
Tokenization. So let's take capital markets for a second, like public shares, right? It used to be denoted on pieces of paper. Now it's on a database somewhere in ones and zeros. And tokenization is the next evolution of that, where it's ones and zeros, but it doesn't live on a single server. It lives on many different servers, and it can represent multiple different asset classes, not just a particular asset class like public shares. So what it represents is a universal language for all asset classes. So whether it's debt, whether it's real estate, uh, whether it's public shares, private shares, theoretically, tokenizing all of these different asset classes allow these assets to talk to each other and be managed on a single platform.
Okay, nice. And you know, I think institutions are finally starting to wrap their head around tokenization 5 years later. It's all the rage right now. I've done up this graphic here. You can critique it if you want. This is basically illustrating the SEC's tokenized securities taxonomy. I've there are basically two major categories here. There's the issuer sponsored model and then the third party sponsored model. And within third party sponsored, it again breaks down even further. I've placed Dinari under the third party sponsored model, but under the custodial section. Do you think that's an accurate placement?
So we do predominantly live in the custodial category, depending on the asset, but we also have issuer sponsors assets where we work directly with the
Mm.
issuers. Again, tokenization is really a protocol that allows different asset classes to live together and speak with one another, right? So all of these parties, they're creating tokens that represent assets, and depending on the situation, like for example, Dinari is a registered broker dealer that can do the custodial assets, but we're also an SEC registered transfer agent that can work directly with issuers. So we do both.
Yeah, let's double click onto that because as far as I know, you were the first. Let's just use this term broadly, tokenization platform, to be awarded a FINRA broker dealer license, and combined with the transfer agent, I can see that you're really going vertical integration with the stack. Do you see this as let's just call it your regulatory moat in this space?
I believe that, so certainly doing things the right way, there is a moat to that because there is a way to scale things in a way that if you're kind of on the fringes and trying to skirt around regulation, you're just not going to be able to scale as much. So I think the moat is in not only the regulatory and having a good relationship with the SEC and FINRA, but it's also the scale that you can get to playing with the players that are doing things the right way.
So let me let's expand on for the audience. Can you elaborate on what the reason and the benefits are for obtaining both the transfer or becoming a transfer agent and also having the broker dealer license?
Oh, because the vision is quite simple, right? We want to create the plumbing to allow a matching of orders and trading across multiple asset classes. So, like as the broker dealer, we can do the custodial model for, say, NMS securities or public shares, private shares, maybe in certain circumstances. But we really wanted to also be able to work directly with the issuers, whether they're issuers of specific funds they wanted to tokenize or the company itself. We wanted to sort of gain access to the ability of starting to mix different asset classes on a single platform.
And so the broker dealer, it obviously lets you go into the market, it lets you purchase shares on behalf of your clients, which in this
Yep.
case, Denari is typically a B2B style model versus maybe some of the others try to go B2C.
Right.
Can you talk about why you took this approach instead of direct to consumer?
So we were really focused on making sure that whatever platform that we created really started to break down the geographical barriers that exist in asset management and access to assets today. And one of the things that we found is there are all these players in various regions, whether it's Argentina or Pakistan or UAE or whatever, that already had access to the investors in those regions. And all they really wanted access to was compliant access to US shares or US equities or something along those lines. And so it didn't really make sense for us to necessarily compete against those groups. We wanted to just enable everyone to sort of broaden the access. And so by creating our API and SDK that people can just sort of plug into and then get tokenized shares, the scaling happened much faster than if we were to have gone sort of B2C. And I would argue that we would not have done as good of a job in terms of marketing it and educating the markets and things like that in the different geographies, like our partners have done.
Yeah, that point really resonates with me. I'm from the Caribbean, and a lot of islands have the same issue where there's wealth management platforms, asset managers, but not an easy way to get direct access to specifically US funds and indexes and stocks, etc. So that and also I think it's worth highlighting that Dinari is not competing what's necessarily already on chain. You're, like you mentioned earlier, the back end, the plumbing, the regulated infrastructure to help other businesses. So you're more maybe, and you correct me if I'm wrong, but you're more competing against other maybe international brokers.
I think so. You're asking me who we're competing against, and I don't think about that very much. So it's I have to think about that for a second. Um, Honestly, we don't think of any international brokers as competition. They are actually potential partners, and we have had situations where initially they came to us and saying like, "Oh, you're competing against us," or "Your partner, is competing against us," or something like that. But then we really explain, no, like it's actually beneficial for us to all use the same network, like because it pools liquidity across different countries and different asset classes and things along those lines, and we can offer them assets maybe they can't get access to today. And so people that started out being somewhat adversarial have come over and become partners to us. So, I mean, that's kind of, we really believe in this sort of rising tide lifts all boats type of a model in our B2B2C network. And so, I think really what we're trying to do, even for brokerages that are already active in various regions, they have to get their shares somehow, right? And it's usually some kind of clunky mechanism like depository receipts or something along those lines that are not real time, that have a bunch of fees added on top and things along those lines. So like we have found that all of our partners benefit not only from sort of the fees contracting because we don't have as much overhead, but they can also offer it cheaper to their clients and still offer the same experience to their end users wherever, whatever platform they already have. So I think it's actually been really beneficial to a lot of our would-be competitors.
Okay, I love that story. Turning competitors into allies. Okay, co-opetition maybe. So then, how does the business model work? If are you, I know you're not, but I'm going to ask: are you charging fees to the end users? Is it from the API? What is the actual business model here?
Yeah, so our partners, which are the companies that are integrating with our APIs, pay us an API fee. That's it. That's our business model. We don't put fees on top of trades. We do enable our partners to charge some trade fees if they want to, right, on their platform. But we do not charge them or the end user any trade fees.
So who, when with this broker dealer license, it is Dinari's has a subsidiary that has a broker dealer license, correct? This subsidiary would then go out into the market when the end user, the broker's customer, places an order for, let's just say, Tesla. Then the subsidiary will go out to find the best execution and then hold that on behalf of the client in this custodial model, correct?
That's right.
So if there's the API, that's a cost to Dinari. So the API fee is expected to cover those costs. Yes.
Yes.
And so another thing is, this is a clear distinction between Dinari and a lot of the other tokenization platforms. I'm using that word. The chart I put up earlier, Dinari is a custodial model, backed one-to-one. And I mean, not only that, but it's also because you're also a transfer agent, you have redemption rights. There's a direct claim on the underlying security. Dividends is another aspect, and I want to ask a question on that more. And then also governance, corporate actions, right? On the dividends front, how does that work? The users paid out in USDC. How does that work?
Yeah, so today the user is paid out in USDC, or we have a protocol called USD Plus, which is really just USDC that is yield bearing. We kind of give it to them in kind of a savings account form, and then they can convert it to USDC one-to-one. That's relatively straightforward. But tomorrow, you know, in the forthcoming months, we want to give our users more flexibility, so there may be other stable coins that the dividends can be issued in.
So the user right now, it's automatically paid out in USD Plus, and it is automatically, and it's already yield bearing. It's yield bearing as is, correct?
Yeah. Yes.
So in a sense, this is an advantage to holding a stock on chain through Dinari versus maybe through a traditional broker.
Oh yeah, we really want our users to earn as much as possible. Right.
And on your end, how does the conversion process work? The company, let's just say it's Apple who pays the dividend, they will distribute the dividends. How does it work in the background between Apple's payout and then the user receiving that USD Plus?
So we receive the dividend as the broker dealer on behalf of our users, and then we convert that into stablecoin. We have a partnership with Circle to do that today. And USD Plus and USDC are one-to-one exchangeable. The conversion, I guess technically the process today is we receive the dividends, we mint the USD Plus, and we issue it out, and then there's USDC that also backs it.
Okay, and is that process a cost to you? A meaning, any kind of, is it or immaterial?
We have optimized it as much as possible so that it's immaterial.
Yeah. Okay, love to hear that. And then following up again, the corporate actions. Like I as a holder of a Dinari tokenized stock, I can vote on just like if I would have with my regular brokerage, and I do that through my brokerage as regular. Or is there another method with this now?
So you can vote with your tokens in sort of an on-chain voting type of thing, and we translate that into sort of the traditional protocols when they're voting. That can be done. So it's actually fairly seamless if you are experienced with the wallets. But like, there's a nuanced point there in your question there of corporate action is not just about voting, right? Corporate action is also stock splits, right? So for companies that are doing really well, they may split their stocks 1-10 or something like that. If you're holding a bunch of tokens traditionally, like in the synthetic model from the chart that you put up, how does that happen? Because the number of tokens are not changing in your wallet. And so like one of the things that we had to do is create a system where whether it's stock split or ticker changes or any kind of corporate action like this, our token, like you will actually see the number of tokens change if there's a 1-10 split in your wallet. So like it really is ownership in the truest sense of like anything that happens to the underlying stock, you will see reflected in the token.
Okay, that makes sense. And so when you're partnering up with these brokers from around the world in Argentina, Pakistan, etc. But then their clients retail. But then if we're looking at a little bit more, maybe we're looking at somebody a little bit more sophisticated trader who only wants exposure right? Is there any reason to hold this kind of tokenized version versus a synthetic?
So again, even if you want economic exposure only, right? If your token and whoever's providing the token isn't properly taking account corporate actions, you might be out financial exposure as well. So again, if the stock splits 1 to 10 and you have one, everyone else has 10 tokens now, right? And the denominator has changed and the price has changed and things like that. Okay, what is the value of this one token then? Right. And is it the same as the 10 shares or is it not? So like there are these kinds of questions that come into play. There's also, you mentioned this earlier in terms of best execution. There's something called MBBO, right? Which is an actual enforced thing in the US that you have to, as an investor, be offered the best price possible for a given asset. So none of these tokens have that. And so we've actually seen price dislocation happening on various platforms where MBBO isn't guaranteed. And so you may be holding a token that is synthetic that represents Tesla or something like that. But the price is $10 higher or lower than the actual share itself. As a sophisticated investor, that should really give you pause about owning some synthetic tokens.
Yeah, that's actually a pretty valid point. We're seeing some of this dislocation and maybe probably liquidity issues with pre-IPO stocks, specifically SpaceX, which is debuting
Sure.
very soon. And of course, I found out that Dinari is also going to be listing SpaceX stock one-to-one backed on the same day that it IPOs and available for all of your clients. Care to talk a little bit more about that?
Yeah, so again, there's a right way and a wrong way of doing things, and we've seen some platforms already offer SpaceX shares in token form. Those are not real. There's no way you can actually, back that right now, right? And so obviously we're launching as soon as the market opens on Friday. As a broker dealer, we have access to SpaceX shares. We're going to mint those tokens. We're going to make them available to as many platforms and partner platforms as possible on the same day, which is really unprecedented, right? This hasn't really happened, especially in a high-profile IPO like this, for it to be available to people around the world on the same day of the IPO. So we're really excited about this. I am sure there's going to be some kinks that we have to work out and things along those lines, because there always is. Because people may not be aware of this, but like even on the U.S. stock exchange for an IPO like this, there are liquidity issues on the day of the IPO. It takes several days, for some kinks to get worked out. But we're going to do our best, and we're certainly going to make it available to as many investors as possible on as many platforms. But I think what people can be assured of is the one-to-one backness of D shares is going to remain true even for these very sought-after tickers on IPO day.
Yeah, 100%. That's amazing. Where was this technology when I was younger looking for this to have instant access to probably what is the hottest IPO I would say ever and most oversubscribed in terms of absolute dollars.
Yes.
That's crazy. And you also just mentioned kinks. One thing that I was uncertain of is off our pricing. So
Mm.
we let's just say weekends. It's 3 a.m. on Sunday, right? And I have my Dinari SpaceX token.
Okay.
How is the price determined there? The traditional markets are closed. There's also live synthetic perps with different reference price. Like how are you combating this?
So this is why the more brokerages that are connected to us, the better the price discovery becomes, right? Because when the traditional markets are not open, the price is really determined by the order book that Dinari has on the Dinari Financial Network, DFN. And so all of the partners that have plugged in somebody in Pakistan might want to sell their SpaceX shares, or somebody in London might want to buy the SpaceX shares on a Saturday morning or something like that. And we match, and we do the best that we can to match those orders. And so similar to like after hours trading, um, there isn't really a market order. There's limit orders that you can do, and those limit orders get matched with one another. And so the price discovery is really just the market forces in the purest form. And we have market makers that facilitate the liquidity, but it really is for people that want to put in limit orders on the weekend. If there is a matching order on the other side, it will execute.
So that's interesting. You mentioned DFN, and you mentioned you also have market makers to help with the price discovery. Um, let's just stick with the SpaceX example. SpaceX is listing on Hypercore, correct?
That's one of the places.
One of the
Yeah.
places. It's listing multi-chain.
It's multi-chain, and as you remember, we have partners in over 85 countries of various platforms that have integrated onto our APIs.
Okay, so the DFN is for the off-chain order book matching, whereas maybe Hypercore is just for you. I can think of it as different market makers for on different chains as well as off chain, and you aggregate all of this using DFN to do that best order price matching. Is that a fair way to categorize it?
So you can think of DFN as an on-chain order book that aggregates liquidity across all the different chains and all the different platforms. Again, we've done it this way because we want the best experience for the end users, right? And so for there to be just liquidity on this chain or this platform or something like that is actually not a great experience for the end user. And so ultimately, no matter what platform it is in, the liquidity flows back to a centralized limit order book that handles this. Um, Obviously on the weekends, right, when there isn't a bigger order book off chain that is backing the liquidity.
And so the DFN, does that run simultaneously? If it was during market hours, Wednesday at 12, does it run simultaneously, or does it only turn on after hours on weekends?
It runs simultaneously, but it is designed to be smart enough where if there is a better price off chain, it just takes the off chain liquidity rather than matching orders purely on chain.
Okay, that's awesome. Um, so this seems to me like it's the off-chain and on-chain worlds are finally converging. This is SpaceX is probably, like I mentioned before, probably the hottest IPO, and to get instant access is actually insane. Is have Do you have any takeaways from this year, from when you got the license? Any learnings to get to this process?
So there were any number of ways that we could have tried to take shortcuts along the way, I would say. Uh, Especially if you're operating outside of the US only, you didn't get proper licenses. Maybe it's a synthetic thing, so you don't really get voting rights or anything along those lines. We really stuck to our guns over the years to basically say we were going to do things the right way. And now people are finally recognizing that that makes a huge difference. So like that's really exciting for us. Like tomorrow, Friday morning, you'll be able to go and buy SpaceX shares, yes, on Hypercore, Hyperliquid, but also on a platform like Facet, which is like a neobank platform out in UAE or Pakistan or something like that, or like um, any like neobanks that you might be familiar with, or wherever you're banking or something along those lines that are partners with Dinari, you'll be able to gain access to. It really is kind of an unprecedented thing, an unprecedented time. And this is not like some of these tokenization platforms, they will say, oh, if you're somebody in Argentina, just be happy that you're getting any synthetic, price exposure at all, type of a thing, right? Like, and that's just kind of a weird attitude to have. Like, those people actually deserve the access and the rights to the underlying shares, which is what we provide with these shares. And I think for the first time, really in history, this is going to happen across 80 something countries on IPO day, where people are actually going to get exposure to the shares, not just the financial upside, but the shares, and that's something we're really excited by.
Yeah, there's huge advantages over the one-to-one backed versus synthetic, and specifically your version of the one-to-one backed, because there is the SPV model where maybe you don't have direct claim on the shares itself, but you have clears through and then you have counterparty risk added on top of that. There's a lot of issues there, but then there's also
Yeah.
the where they're tokenizing share entitlements, which also gives investors, dividends, corporate actions, I assume. What are the trade-offs here? Because this is actually one comparison I'm not super clear on. Like, what are the trade-offs between the Dinari model and then the tokenization of security entitlements?
So in effect, from a practical standpoint of the user, I think at the end of the day, I don't think there's much of a difference, honestly. And to us, there's different groups that are trying to do things different ways. And I think the entitlement side of things, like the DTC efforts and things like that, are really good. I think they're very compliant and legal and things like that. Like right now, retail can't get access to those things. That's one of the limitations of the platform. But I believe they're working on that. To me, these efforts are all great because we're all on the frontier. There are no established answers for how this is going to go. But by doing it in a compliant way, we're setting ourselves up for a future where the tokens are not really representing anything. They are the shares themselves. Like, we're going to get there. Just like we made the transition from paper to ones and zeros on a server. Like today, none of us says, show me the paper certificate that backs my share on Robinhood, or whatever the platform I have shares on is, right? That's because at some point we decided the ones and zeros are sufficient enough for them to be the shares themselves, and we were going to get rid of the paper. The same thing's going to happen for tokens. Tokens today, we're saying, oh, it needs to be backed, or it needs to represent entitlement or whatever. But really, to me, this is just kind of an artifact of a transition that we're going through. I think if you're doing things the right way, eventually we're going to sort of converge on the best method possible for this. Obviously, Dinari has an approach to what we think is the best method. I'm not so arrogant to think that there aren't others who are trying to do things the right way as well. And I think those people, those groups will be rewarded to be able to say, yeah, our tokens really represent the shares now. They are the shares, right? There's nothing that needs to be backed. And what an amazing thing. All of a sudden, shares went from just digital to like now programmable digital, right? And they are the shares themselves. You own a token, that is the share. That's the rule that Dinari has established for all of our tokens. And we're just working with the regulators to make sure that that gets completely codified in the future, where we will say, we no longer need these ones and zeros on this server. The token itself is going to be the share.
Yeah, I'm looking forward to that future. So this is, in effect, I mean, we've talked about the synthetic model, we've talked about the perp model, we talked about their trade-offs. I've just mentioned the DTC model, and there's the Dinari model. But you've mentioned a future where the token is the share itself. Are you seeing what Dinari is doing now, maybe similar to the DTC, as a stepping stone to that future? Yeah.
100%. We're all the things that we're having to do off-chain right now, where the off-chain syncs with the on-chain in this mirrored fashion, or the custodial model, we're doing to make sure that we're remaining compliant with all the current regulations around these shares. But again, just as we made the transition from paper, I think we're going to make the transition from the ones and zeros to tokens, and that's that's just going to take time for the regulators to get comfortable that groups like Dinari and DTC are doing things the right way, that the tokens are not hackable, they're not fudgeable, they can represent the shares without it running afoul of securities laws and concerns and AML and all this stuff. And if we do things the right way long enough time for a long enough period of time, then eventually the regulators are going to feel comfortable saying, tokens are the shares themselves, not the ones and zeros that back it, right? It's a weird concept even today of like the shares that are backing it are just ones and zeros on another server, just like the tokens are. So it's kind of a weird place to be in. But I understand, like, we don't want to harm the end investor, so we want to make sure that we walk before we run. And that's where we are right now. We're kind of going from crawling to walking now, and we are working with the regulators to make sure that this transition is as smooth as possible.
Yeah, 100% agree with that. Couldn't have said it better myself. And yeah, I definitely agree. It is a bit of a quirk that these ones and zeros represent these other ones and zeros. And then
Yeah.
I remember when I now got into asset management, and simultaneously I was reading the Bitcoin white paper, and Bitcoin was 10 minutes, maybe an hour in reality settlement, and then back then it was T+3 settlement days, and I thought, wow, this is so old, and I started to look into why, and it was this layer duct tape onto this layer, and I was like, oh, this is so messy, and then I was like, oh, blockchain is so much cleaner. And then now I realize, okay, we're kind of still duct taping this stuff again right now at least in the intermediary process, you said, until we reach that end goal that you just spoke about. And so, we're coming up on time here, but on that note of end goal, what is, in your opinion, the number one thing that you're looking forward to that you can do with tokenized stocks on chain that you can't or are limited to do with traditional brokerages?
Oh boy, that list is endless. Here are a couple of things I'll just throw out there for people to think about. Today, when you look at exchanges, NASDAQ, NYSE, MEMX, IEX, all their order books are whole shares only and always against fiat. So like Apple shares are traded in whole shares against the dollar, let's say, right? If we live in a world where all those shares are tokenized and we have stable coins, right? What's stopping us from the order book itself being fractional, right? So like, we think of fractional shares. Oh, fractional shares kind of exist on broker dealers and things like that. That is all the broker dealer having to do all this extra work, duct tape, as you said, right? Where they're having to buy the whole share and they're kind of giving pieces of their shares to their user and things like that. And it's really messy. When everything is on chain, including the order book, there's actually kind of just a seamless transition onto, the order books actually being able to handle fractional shares. Okay. Once that happens, there's something really interesting that's possible all of a sudden, which is instead of the order book always being like Apple to the dollar or NVIDIA to the dollar or something along those lines, can it be Apple to NVIDIA directly? Can you start having order books in pairs that are share to share? Because as you know from your own experiences, if in the wealth management context or something like that, or asset management context, you want to move out of one asset into another, you're settling to fiat first and then going into this other asset, right? Well, is it possible for us to swap directly? Because swap is a native term in crypto, right? We all understand it. Well, if that technology comes to the capital markets, something really interesting happens. Like interesting questions start being asked. Okay, uh, as a average, let's say, investor that is not part of a fund or something like that. I'm just retail. Okay, I have certain amount of money in Apple. I want to move it into NVIDIA. Today, I have to move it into fiat. I have to wait for that to settle, which we say T+1. but it's really not if you have any amount of money that's larger than like a few $100 or something like that. And then you're going to go into this other asset. That is a taxable event today. But all I wanted to do is pull money out and then put it into another asset. Okay. If all of a sudden, down to the order book level, you can swap from Apple to NVIDIA directly, where I never settled to fiat or anything that could be construed as fiat, like stablecoin or something like that, is that a taxable event? Because I kept the money in the capital markets, right? And that is like a really interesting question that we're going to have to answer in a legislative fashion once this technology exists. I believe it's not a taxable event and it shouldn't be a taxable event because it overwhelmingly benefits the end investor as well as the capital markets for them to keep the money in there. They didn't see any liquidity out of that, right? And so there are these interesting questions like that I think people are not quite thinking about yet.
Yeah.
But all of these, once the technology really shifts over, all of these questions come into play, and I believe we'll answer them in a way that really benefits the end investor.
I love that. That's super interesting. I definitely didn't think about what happens to portfolio management when at the order book level they're directly dealing with the fractionalized shares instead of having to put it on their own books from like the DTC or whoever else. That's super interesting. I'm already thinking, well, if I want to come out of NVIDIA, I just want to decrease risk. NVIDIA to S&P 500 tokenized ETF, just slightly decrease risk without having to hit that cash leg. Or then even if I want to do that cash leg, you bring up that very interesting point about what is a taxable event. If I put it into a bond ETF, which is to me could be effectively cash, is that a taxable event? Okay,
Yep.
fascinating, fascinating future we have ahead of us.
Oh, the capital markets are going to be forever changed, by on-chaining. It really is, like in a way that people are not quite thinking about yet. And I, like I said, I think it's going to be for the benefit of the end investor. But this is not. Oftentimes, people talk about tokenization. It's like, oh, it's just a wrapper, and like it's not really anything new and things like that. No, people are not really thinking about the deeper implications of when the entire system shifts over to on-chain. Um, how does it benefit us?
Yeah. And, I was thinking maybe you were going to say lending or something to do with margins. Maybe you're going to talk about some kind of like yield process protocol or like that. I mean, there's a list of things you can do with programmable stuff. And then when you say people aren't thinking deep enough about this, I think, yeah, they're not thinking about the programmability of it. But it seems like even I wasn't thinking deeply enough about this either. So I mean, when you really
It's
get down into the weeds, it's really a foundational level change of the capital markets, like you just mentioned.
Yeah, that's the mistake that I see a lot of institutional investors thinking about tokenization making is they're trying to really apply tokenization just to the framework that we have today. They're not asking how does the framework fundamentally shift as a result of this technology change. And so I would encourage all of us to think about that because there's some really interesting, edge cases and things like that. That a couple of these things that I've mentioned thus far. When you start thinking about it, it's just like, oh, it's endless in terms of how the capital markets, how the financial system changes once everything is on chain. And that's what I mean. It's like when you ask about the end state,
Yeah.
when everything is on chain, all of these things are possible. And yes, you mentioned some of the other interesting things in terms of atomic lending and borrowing and all these kinds of things. But like, how atomic lending and borrowing intersects with, fractionalized order books and things, and instant settlement and all, like, there's really interesting things that you have to start answering questions about when you think about that end state. All really exciting and all, I believe, going to be ultimately beneficial.
Yeah, 100%. I can tell you're very passionate about this. You've given me and my AI agent a rabbit hole to dive deeper in tonight. I'm excited to do such. But thanks so much for your time, Gabe. This was super insightful. Where can people find you and learn more about Dinari?
So Dinari.com is definitely the place to start. If you want to start trading, you can go do so. App.dinari.com is the the interface by which our broker dealer operates. And then, of course, SpaceX shares are going to be available starting tomorrow when market opens. So that would be 9:30 Eastern in the U.S. Time. And as you mentioned, on Hyperliquid as well as all of our partner platforms. So I would go check it out.
Okay, awesome. Thanks so much, Gabe. And for listeners at home, if you've enjoyed this, please, whatever media you're listening on, Apple, 5 stars, Spotify, YouTube, leave a comment. It really helps us out. And thanks for listening, and we'll tune in again next week. Cheers.